A sector that seems to be under the bear's control, even as the theme of telecom tower consolidation is playing out. There is another kind of consolidation waiting to happen. This is to do with spectrum. Sources tell CNBC TV 18 that hectic negotiations for spectrum sale have already begun, even as the government is deliberating on relaxing the spectrum cap to aid the transactions. Nisha Poddar is here with details. Nisha, what are you picking up?
Telecom dynamics have changed completely in the last couple of years, and more tectonic shift is waiting to happen. Sources with direct knowledge, and many of them, the industry participants, the iBankers, the government portals, have all confirmed to CNBC TV 18 that spectrum sale and M&A regarding spectrum would be the next big wave for consolidation in the telecom sector. In fact, hectic negotiations are already on, is what we gather. The sellers would be the debt-laden companies or the global players who want an exit. So Tata Tele, Reliance Communications, Aircel, after the merger with Reliance Communications failed, could be the likely sellers, while the bigger giants in the telecom space like Bharti Airtel and Reliance Jio would be the consolidators, is what we gather from sources with direct knowledge. But remember that spectrum cap is a big worry at this point and is restrictive in nature for more consolidation to happen. The government is also expected to aid the telecom sector for this consolidation to really take place, and we do hear that government is deliberating at this point in relaxing those spectrum norms as well. And here, remember that government may also gain in terms of revenues with the liberalization charges which would be levied on some of the spectrum when they come up for sale. Now remember that spectrum cap for each band in a circle is 50%, and overall all bands put together in any circle is 25% for any given telco. If you're talking about consolidation where only 3 or 4 meaningful players exist, then the spectrum cap needs to be relaxed, and that's exactly is what is happening at this point. So more mergers and acquisitions in the telecom sector is what we anticipate.
Okay, Nisha, thanks for that. We'll take a quick break. Up next.
What's the best gift you have given to your wife till now?
Myself.
We get you a rapid fire with the big bull of Dalal Street, Rakesh Jhunjhunwala. Stay tuned for that. Welcome back. It's a done deal as far as Shoppers Stop's Harper City is concerned. Future Group is set to acquire the supermarket chain for over 650 crore rupees. Now, while Shoppers Stop is optimistic about driving profitability up, Future Group hopes the deal will improve their top line significantly. CNBC TV 18's Priya Sher caught up with Kishore Biyani, the CEO of Future Group, and Govt Srikhande, the MD of Shoppers Stop. Here's what they had to say.
In 12 months time or 18 months time, it can add to 13 to 14% of our top line. We believe there's a scope of 2% immediate improvement once it comes under our fold on that margins. And with fashion coming in and the percentage of fashion which they sell is 16, I think we can take it up to 35. At the first quarter level, they made a profit of EBITDA of 7 crores at the store level, around 7 to 8 crores. If you imply that into 4-month period and the other benefits which comes in, I think we can touch 100 crores of EBITDA.
If you look at our business, in our consolidated business, Hypercity was bringing down our profitability at a dramatic pace, which will now get turned around because now it will be only a standalone business of fashion. So we are currently on a standalone basis of 492 crore debt. With the multiple things that we are doing right now, the partnership with Amazon and the partnership with Future Group, it will come down by almost 250 crore. So we believe it will come down by almost 40-50%.
Okay, and here's the CNBC TV 18 special interview. What was the first stock that Rakesh Jhunjhunwala bought? What was the big bull's first salary? What is his favorite holiday destination? Varinder Bansal caught up with the big bull Rakesh Jhunjhunwala in a freewheeling candid chat. Here's an excerpt.
Mr. Jhunjhunwala, tell me the first stock which you bought.
First stock in life I bought was Tata Tea.
The first stock where you made big money.
Was also Tata Tea.
But how much stipend you got when you started your
I got
career?
60 and 60, 80 and 90 and no tea. We had to pay for the tea.
You had to pay for the tea?
Yeah.
So you got 90 rupees at
In the third year. First year 60, then 80, then 90.
Oh, from 90.
But we used to put bogus conveyance and make it double.
First big lesson you learned from the stock market?
Be humble.
Do you still turn on the music at the night and dance with your kids before they sleep?
Not every day, but sometimes.
What gives you the most happiness?
Exercise.
What's the best gift you have given to your wife till now?
Myself.
How was the moment, when you and your family were blessed with kids after 17 years of marriage? It seems magical.
It's a utopia movement. It's a great, it changed my marriage, it changed my life. It changed my Rekha's life, it changed our priorities, it changed everything, and I earned, not that because we had a child because of that, but I earned the greatest wealth of my life after Nishtha was born.
Best destination, holiday destination for you?
Should I tell you? Kashmir.
Kashmir, really? And outside India?
Outside India, I think London.
Okay.
Or maybe New York.
Okay. And best movie you have ever seen?
Pyasa, Sahib Bibi or Ghulam. They are the movies of a pained man.
I also heard stories where you also sing sometimes in some of the parties. Or you love
I sing. I sing.
Shairi.
You
love shairi also, sometimes if you can quote something.
Someone wrote a poetry for Rekha. So I quote that poem कि मेरी जिंदगी अकेले कोई जिंदगी ना होती मेरे साथ तुम ना रहती तो कोई रोशनी ना होती.
Well, never seen before candid rapid fire with Rakesh Jhunjhunwala. We'll get you more excerpts of that interesting interview through the day. But let's move on for now. International campaign to abolish nuclear weapons, also known as ICAN, has won the Nobel Peace Prize for 2017. According to the Nobel Committee, the group won the award for drawing attention towards the catastrophic humanitarian consequences of the use of nuclear weapons. The FIFA Under-17 World Cup, India is set to kick off today with 2 matches at 5 p.m. Colombia will take on Ghana at the Jawaharlal Nehru Stadium in Delhi, while New Zealand will face Turkey at the D.Y. Patil Stadium in Mumbai. And at 8 p.m, the host, that is India, will battle it out with the US team at Delhi's Nehru Stadium. And with that, it's a wrap on this edition of After the Bell. Thank you so much for watching. Stay tuned to CNBC TV 18. Taking stock, we'll take all the action forward on the other side of this very short break. Stay right there.
welcome to Taking Stock, the show where we take stock of the week gone by and prepare you, of course, for the one that's coming up next. I'm Surabhi Upadhyay, and with me, as always, is Anuj Singhal. Anuj, what an interesting week it's been. You know, when we started the week, it was a short week, just 4 trading sessions. But the world is looking like a different place from Dalal Street's perspective, isn't it, wouldn't you say?
Oh, yes, Surabhi. I think there are 2 or 3 key takeaways. The rally on Friday, despite Bank Nifty's underperformance, so is the market changing leadership. I think that's number one, point number one. Commodity stocks clearly are leading this market, and Reliance, I mean, you now have a leadership stock, which is Reliance. Reliance was up 7% this week, so phenomenal move on that stock. The second key takeaway for me was that our market is beginning to catch up with the global market. We underperformed through September until Friday morning. That was the complaint. But on Friday, actually, you saw the Indian market actually being the best performing market. So corrected some of the underperformance. Could it be some more? And finally, we may have put a double bottom at 9,700. You know, double bottoms are important because on a 6-month time frame, if you put a double bottom, in that case, if you take out the higher top of 10,150, 10,200, then this market can straight away dart back and seek higher levels, and the template could be intact of buying all dip. So next week is going to be key. Other stocks have started to contribute. The Bank Nifty, that needs to get its mojo back to see if that can help propel the market. But now we are a gap up away from 10,000, and I think that itself will bring a lot of new buyers.
Absolutely, Anuj. And as those numbers have climbed back towards that 10,000 mark, I guess the commentary on the street and the discourse has also changed. No longer is it about the gloom and doom and the bad macros. It seems to be more about earnings and whether the numbers that we've seen from auto companies, for instance, the sales numbers, whether that will show up in P&L. Well, joining us on the show to take us through some of these trends, to take stock of the week gone by and give us his sense on the market, we have with us Sanjay Mukim, Director of Indian Equity Strategy at Bank of America Merrill Lynch. Welcome to the show, Sanjay, and it's always a pleasure to have you with us. Thanks for joining in. So what is your sense? I mean, a lot of this gloom and doom talk that was accompanying that move to about 9,700, is that firmly behind us, or do you still see clouds on the horizon?
Good afternoon, glad to be on the show. Look, much of the talk of this gloom and doom, I think, was exaggerated in the first place. I mean, most of sell side, and it was well expected that the GST would lead to destocking and that the headline GDP numbers would look weak around the time that the transition happened. For whatever reason, market and sentiment around GST was that on the 1st of July, the GST is turned on like a light switch and everything's fine. Of course, reality is not like that. And you do see a transition period in which the market and investors and businesses catch up to what the GST is, and the pain is likely to last for a while. So one, the focus, excessive focus, I think, on one GDP number in a quarter was, I think, too much. I don't think that we should have gone by it. But my sense is that in India, people were looking for some sort of an excuse to book profit. The market had done extremely well. Earnings had been missing for a while. Valuations were very high. And more importantly, we had other countries in North Asia, perhaps, where earnings were pretty strong, much stronger than they are in India at the moment. So an excuse, perhaps, in excessive focus on the short term. We've seen some bit of a rotation. I don't know if this is over, because honestly, on the ground anecdotes on the GST is that the transition is still on. In fact, as you've seen, there is expectation that the council will come up with some sort of relief today. We'll see how it goes. But yes, sentiment can swing faster, and it does seem that some of that gloom has eroded.
Okay, that's interesting, Sanjay. But for now, you stick with your Sensex target of 30,000, and we have an earnings season coming up now. How important is it going to be for the market's health?
Well, in a way, earnings not just for this quarter but for the next 2 or 3 are critical, because they need to demonstrate the path to growth. India has had this narrative of the market going up without earnings for a long while, especially from a broader basket. And we need evidence to fix that. We need to show that the GST and all its turbulence is behind us. I don't have too much hopes for the September quarter, to be honest, but the December and March quarter, the headline numbers should look very good, because you'll see effects of restocking, you'll see the seasonal sales pick up come in, and of course you'll have the great base from last year on Demon, both in December and in March. So headline numbers for, I think it's subsequent 2 quarters, which should be more exciting than the one in September. I think September, while you've seen a recovery, the averages might still not be too much higher than last year.
So Sanjay, the question is then, is this second half recovery that you're expecting, is that already in the price with the move to 10,000? Or do you think it'll give, if actual numbers start showing up, it'll give further impetus to the rally?
Well, I'll answer it in 2 ways. Yes, I think given the current valuations, more than the recovery is in the price perhaps. But that is essentially the conundrum, because the market has been rallying for the last 2 years, in fact, without a broad-based earning revival, which is essentially a cost of capital rally. And we've written in many notes that in India, as with elsewhere in the world, the cost of equity has been falling. It is now at an implied all-time low, really. And that upside is fickle. It can change, it depends upon global risk sentiment, it changes upon what central banks do and so on. So in a way, yes, if at normalized multiples, more than the growth is in the price, but multiples themselves have gone up because cost of capital everywhere has fallen.
Sanjay, this week was about the financials underperforming and commodities surging. Of course, commodities have been rallying, but other stocks also taking over. Do you get a sense that the consensus trade of just buying financials is maybe now getting overcrowded? Is this market now finding new leaders?
Well, overcrowded, yes. I do believe that financials is a fairly consensus and well-owned sector. However, from a growth perspective, that is the one secular corner where we are reasonably confident about. See, commodities by definitions will have their day in the sun, and then that rally will end. So it is not a part of a portfolio that you hang on to for the next 5, 7, 10 years. But in a growing economy like India, it is the consumer-facing businesses, staples, discretionary, financials, where you can build a portfolio which persists for a while, and you can stay with those positions. And I do think that financials does qualify at this point of the Indian business cycle.
So, Sanjay, what would you advise sort of going with if one is to look at better earnings in the second half? Then beyond financials, what else is it that you like in the market?
Yeah, so we are hopeful that the rural exposed sectors display some sort of a turnaround in the second half. We don't get the sense that